All right. Hey, good morning, everybody. We are going to get started. Let me know if you can hear me. I'm using this new streaming software that I've been setting up this morning. And hey, good morning. All right, good. Well, hey, if everyone can hear me, we'll go ahead and get started here. Like I said, I'm using this new streaming software and trying to make sure everything gets set up. Hey, we are going to try. I haven't done this in a while. Okay, good. I'm glad everyone can hear me. I have not done this in a while. So we're going to do Open Line Wednesday today. And yeah, the NFAC is back, the Not Effing Around Coalition. We're going to be talking about them today. Good. All right, so I'm not taking calls right this second. I got a few things I'm going to talk about. And then if folks want to call in, we'll try to get going here. So yeah, Max, this morning, by the way, this is from this morning's early warning report. I'm not going to go through the whole thing, but we are going to talk about a couple of things from this morning's report. NFAC, the Not Effing Around Coalition, you may remember them from a couple of events they did last year. They did a march on Stone Mountain, and then they did another march in Louisville, and one of their members was shot. I mean, it's not really, yeah, you can laugh about it, I guess. One of their members was shot through a negligent discharge, and so this guy, Grandmaster Jay, his real name's John Johnson, apparently, has one federal charge pending and also a state charge pending in the state of Kentucky. He was recently on a hip hop TV interview, and he said that NFAC is doing fine. And he said that they formed a new international army, I guess. It's called the United Kinetic Black Nation, the UKBN. And he said it's becoming a global problem for a few people. According to this interview, he said they have NFAC chapters as a part of this United Kinetic Black Nation. They have chapters in Jamaica, Haiti, France, the UK, the Netherlands, Switzerland, the Democratic Republic of Congo, and Angola. And now they have this international movement they're building. And he said, now this is interesting. He said that he was facing more charges, more federal charges over a number of things. But he said that most of the charges were likely dropped due to the new administration. He said, quote, "They trying to railroad me, destroy the movement, shut everybody up, put y'all back to sleep, disarm you, put a vaccine in your arm so they can jack your ass around or kill you and incarcerate all the black men they can and assimilate all the sisters." That's what he said on this interview. That's a direct quote. He also said that BLM as a movement has been co-opted by other races, politicians, and corporations. But basically what he's saying here is that the world needs NFAC, and they need the United Kinetic Black Nation because they want to build a black ethno-state in the United States. And now they're building this international movement to make sure that happens. Now, basically what we've been looking at is once he gets through these charges, like if he doesn't go to prison, NFAC may be back. Also, looking at another armed protest activity, if they do another armed protest, the Chauvin trial sure would be a pretty good opportunity to show off the NFAC again. So that's the latest thing on NFAC. Also, now that we have Dustin on board, Dustin has started to write our Russia NATO sit reps. So in this morning's report, he has another update on what's happening in Ukraine. Max is a former Navy officer, and so he's written up a China sit rep for us. He's written up a China sit rep for us this morning. That is in today's full report, which you can get at forwardobserver.com/subscribe. Try this out for 7 days. See how you like it. and most people do. Most people stay. So we certainly would appreciate your support, and you'll also get access to the podcast, the report, the podcast, and also we are one reason why I'm trying this new streaming software out is because we are eventually going to turn this into kind of like a daily show. And what we'll probably do is do kind of a YouTube live stream for the first segment, and then we'll do a members only live stream where we're getting to some of the bigger details here. Also, in this morning's situational awareness financial firm UBS is saying that about 10% of total retail now of the stores that have already closed. This obviously does not include them, but they say 10% of the remaining retail stores in the United States will be closing over the next 5 years. This mainly has to do with shifts in consumer preference. We're buying stuff online, buying less in retail spaces. My concern is, and has been for a long time, could this basically pop a commercial real estate bubble? Now you have all this commercial real estate, not just land, but also warehouses. You have these shopping malls, Macy's and Sears and JCPenney, they've been pulling out these anchor stores. And they're called anchor stores because high volume of traffic into these stores is what keeps these other smaller stores open. Because, you go to Macy's, and when you're in that shopping center, or you go to wherever and you're in that shopping center and you dip into whatever other smaller store there. So without these anchor stores, a lot of these smaller stores may disappear just because of the lack of traffic. And that's something that we've seen locally. I myself have seen locally. I'm sure it's happening all over the United States. And so one of my concerns is economic blight, basically. What ends up happening is you have high quality stores that go out of business, and these commercial real estate owners are trying to get the space rented. So what they do is they rent it to lower quality stores, which might attract a lower quality of customer. And now you get this rash of, break-ins and property crime and, like vehicle break-ins and stuff in the parking lot. Whereas, maybe that didn't happen as much before. But that is the other effect here that we've been seeing play out all throughout this period of COVID is mom and pop stores continue to close. And who is absorbing all of that commerce? It's the retail giants, the established major corporate retail chains. And you don't need me to tell you that that's not a great thing for the country. But basically, it's the COVID. Listen, the economic shutdowns, all this stuff. This is like trickle up corporatism, because all of that money that's no longer being spent at these mom and pop shops are just going to Amazon and other places. So that's not good. And look, if you're doing your area studies, everyone should be doing an area study. One of the things you should be looking at, it's layer 6, economics and finance. Start looking at these shopping malls and maybe drive by there once a week. And if you see stores going out of business, draw some conclusions. What is that going to make this area look like? Is it going to be economically depressed? Are we talking about job losses? Are we talking about empty, vacant space? Are we talking about maybe a local problems with commercial real estate? Maybe a national bubble doesn't pop, but maybe in your area, there is a minor commercial real estate crisis. And what does that mean for the overall area? I remember if you've read Hillbilly Elegy by J.D. Vance, by the way, I think that guy's running for Senate in Ohio. But J.D. Vance has his book called Hillbilly Elegy. And it's basically like, he's from this small little Appalachian town, and he goes off to the Marine Corps. He comes back and he just talks about how economically depressed this area is. And one thing that we saw during the Obama administration, especially in West Virginia, man, I went to West Virginia, and some of those towns have been absolutely devastated. There are no jobs there because the Obama administration crushed the coal industry. The Biden administration is doing its best to crush the oil and gas industry. And, their plan is to turn all these coal miners into coders, and it just doesn't work. Talked about, the apocalypse for truck drivers that's coming, already started. So basically, we're going to see millions and millions of jobs disappear in this country, not only due to environmental regulations and government policy, but also due to uh, automation, machine learning, artificial intelligence. I've talked a lot about this stuff before. I'm not going to go back into it again, but um, at any rate, moving on, let's head down to agriculture because the agricultural members of the House Agriculture Committee have been meeting with the Federal Maritime Commission because ocean carriers are basically declining to carry U.S. exports into Pacific Rim countries. And the bottom line here is that there are a number of reasons for this, but basically U.S. farmers are expected to lose between $5 and $7 billion worth of exports to China because of the reduced carrying capacity. Some of these ocean carriers aren't going to Asia because of reduced port capacity. Basically, they don't want to waste the time and money by sending one of these ocean carrier vessels to China and then just have it sit outside of port for days or weeks or however long it might be. And increased Asian imports is another thing. They haven't increased their port capacity, but they've increased their imports. So basically the same thing that's happening on the West Coast at like the Port of Los Angeles, the Port of Long Beach. You got these carriers stacked up out there. So at any rate, that is something we're also looking at on the agricultural side. So just two main topics today. I did not see the Second Amendment. I did not see the Second Amendment protection bill that passed in Arizona yesterday. Although I did see where the Biden administration is now saying that they're not going to do a federal vaccine passport due to a couple of states, like Texas said we're not doing it. I think it was Ohio, where some legislation was making its way through the state legislature there that would ban vaccine passports use in the state. Let's see here. Checking. Rich says, big vacant mall near me. Yeah, so that's one thing I would look at is what are the second, third, fourth plus order effects of vacant commercial real estate? People have talked about this commercial real estate bubble for a long time. It's something I've looked at, and I don't know what would actually pop it. And I actually haven't looked at values in a long time. One of the things that I look at to gauge a potential housing bubble is you take the Case-Shiller index and you compare it to a number of other factors like wages, GDP, and basically residential housing has skyrocketed far and above where employee wages are. So there's a lot more basically the problem is that home values are increasing faster than wages. Okay, that's a pretty good indicator that there's a bubble forming. And in some of these areas, it's much more pronounced. One reason why we left the city of Austin is just because I started looking at home prices and I'm like, dude, I could buy a McMansion out in the country a couple of hours from here for what I could buy, a moderately sized family home in Austin. It's absolutely insane. So, all right, here's what we're going to do. I'm going to take a couple calls. We're going to try this out. So if you want to call in, I'm pretty sure this is going to work. You can call this number on the bottom of the screen. Let me just make sure here. I think we're all good on this, and I'll take a call. By the way, if you have questions, go ahead and pop them in the comments because I'll spend a few more minutes with you today answering questions. Yeah, I'd like, actually, I probably need to get in touch with Don the Pleb. I don't know him, but if you could pass me like some contact info, like an email address or something like that, perhaps we can figure this out here. 8291. That should be right. By the way, you call in, if you press 0, it'll put you on our soundboard for anyone who wants to call in. Oh, here we go. Let's see. All right, let me see. I forget exactly how we can do this, but hello, caller. Are you there? Okay. Let's see here. Hang on. Stand by 1 second. I don't exactly remember, but are you there now? There we go. All right. Hey, good morning. Are you there? Oh, good. Stand by here. I'm trying to figure out. Hang on. Let me make sure this is going through here. Okay. Are you there now?
I sure am. Hey there, Sam.
Okay. Great. Great. How are you? Thanks for calling in. What's up?
Doing good this morning. I wanted to pick your brain on how you see, speaking of property bubbles and a possible, commercial property and also residential property, bubble that's looming, where a lot of these costs are essentially rising, not due to, weird bank-based products like in the 2008 bubble. A lot of this stuff now that we're seeing is solely due to governmental regulations and zoning. Since it's not likely the government's going to change these zoning laws in the event of, a bubble situation, how do you see that affecting these areas, right? I mean, I think that the closest, analogy we're going to have is like Detroit, right? Where the government's bad, they don't change, and it just never recovers. I mean, do you see that kind of situation happening in other places across the country? And I guess you just want to take that thought and run with it.
Yeah. Yeah. Thank you. If you don't mind sharing, what's your first name, or just give me any first name?
Oh, just Cypher from the chat.
Oh, hey, what's going on, Cypher? Yeah, thanks for calling. Yeah, great question. So there are a number of reasons why property values are rising. Cypher's absolutely right. Zoning laws, and and also another reason is we're seeing massively inflated residential housing basically shift, especially here in Texas, because we are getting a lot of people from California. So one thing I observed in Austin is you're having people from the Bay Area. Okay, so tech guys, they're moving to Austin for similar reasons because it's like the next tech town or whatever. It's the Texas version of Silicon Valley. And they're selling $1 million home in the Bay Area. That's, a 4.2 or a 3.3 home, $1 million in the Bay Area. They're moving to Austin. They're buying one for $400,000, and they're pocketing whatever equity they put into it. And so, that's, one reason why, my wife and I looked at buying a house in Austin. We said, there's no way. We're definitely not going to do it. And so that's one reason why especially here in Texas and, in Austin, Houston, Dallas, that is one reason. Another reason is foreign investment. You see this a lot too on the Pacific coast, like Seattle and, maybe Portland and some other areas out there. I'm sure LA is another big one too. You have very wealthy Asians, especially Chinese, and they have to get their money out of China, okay? Because you're basically, you live at the whims of the Chinese Communist Party. Your stuff can be expropriated. It can be regulated. And they want to get that capital out of China. So what do? They buy property. They buy farmland. They buy tons of other things. And so another reason why property values, why really home prices are going up is due to not only domestic migration, but also international investment. Also, yeah. Okay. Rich asked, why would you move to Austin? Look, I moved to Austin, I don't know, 5-6 years ago to be in the tech space because I was running Ford Observer at the time, and I wanted to get into artificial intelligence and actually wanted to build some AI platforms for basically, local intelligence gathering. And I would still like to do that, but man, I kind of run out of time. And okay, the actual video stream quality is really bad. Okay. Oh, you know what? I know how to fix that, and I will fix that the next time. All right. So that's why I moved to Austin. And yes, Austin I call it the People's Republic of Austin. It is probably the most liberal place. Actually, let me rephrase this. It is the most progressive city in Texas, although San Antonio and probably Dallas and actually Houston, because Houston has an attorney general, and basically she's not sending anyone to jail. regardless of what they do. And that's actually a really bad problem there in Austin. So those are my thoughts as to why home values or home prices are going up. Also, the availability of, first of all, mortgage rates are low, and then you have banks loaning out money, and so basically, it's cheap. It's access to cheap capital. Okay, it's cheap loans right now, and people are taking advantage of that and buying up properties, not just to live in, but also as an investment. Because look, you have all these REITs. Okay, these basically an easy way to invest in real estate. And you say, okay, market's hitting all-time highs. The market's out way ahead of the economy. Economic fundamentals really do not support market valuations today. And people basically said, okay, I'm going to diversify. Hard assets perform the best during inflation. Real assets, especially real estate, performs, it upholds value during periods of inflation. And so people look at that and they say, well, I'm going to take this chunk of money out of the stock market. I'm going to put it into real estate. I'm going to buy a rental property. I'm going to put it in a REIT. I'm going to put in some other real estate investment vehicle. And again, that really does inflate home prices. So that's a couple of things that I think are happening. And in some areas, you probably do have a real estate bubble. I don't think it's inflated as bad as it was like during this leading up to the subprime mortgage bubble. But certainly in some areas, absolutely, you have a massive, massive real estate bubble, especially with commercial real estate, given the decline of these shopping malls. And, some specialty stores may do well, may continue to stay open if there's, enough support. But a lot of the stuff consumer preferences are just shifting to online, and they have been for, the past 5-10 years or so. All right. Any speculation on when the NFAC's next negligent discharge will be? Start the timer. Taking a bet on another negligent discharge at their next march or rally. Probably not a bad bet. Patrick says, housing market has been overheated in my area for the past year. People are moving to Indiana from all over, but primarily from the Northeast. Yeah, and actually, this is something that we reported on a few weeks ago. You had the some major moving company. I forget exactly which one it was, but the CEO was talking about all the data that they have from people renting moving vans or hiring a moving crew to move them from coastal areas, high tax, high regulation coastal areas, to low tax, lower regulation, I should say lower tax, lower regulation heartland. And, this is something that a lot of tech companies have talked about too. Basically, you have Twitter and a bunch of other companies saying, one half, 3/4 of our entire workforce is going to be remote over the next several years, or, that's a shift they're talking about too. So if you live in the Bay Area, you live in a $1 million 3-3, and you can take half of that and buy a really nice ranch somewhere in Montana or Idaho, and you work online, as long as you have decent internet access, why wouldn't you do that? And they are doing that. And they have been doing that for probably the past decade, probably since the financial crisis. I remember I spent a summer in Bozeman, Montana for a period of time. I was a fly fishing guide and went to Bozeman for a summer. And the locals called it, not we, but because I wasn't a local, but people were calling it Bose Angeles. The locals were calling it Bose Angeles. And lots of other smaller areas around Bozeman and also all up western Montana, people were moving out there because it was still relatively inexpensive, especially post financial crisis, and pretty incredible. Okay, all right, good copy. Thank you, Hunter. So at any rate, but Colorado's basically been blue by migration from California. This is like the third or the fourth great migration, basically. In U.S. history. All right, here, let's do this. I think I figured this out now. So if I'll take one more caller, and then you can keep putting your questions in the comments. And Cypher, I still need to, let me give you a text or a call today or this afternoon or something. Yes. S says, Colorado is gone and I'm leaving. My brother-in-law moved to Bozeman, to Bose Angeles a decade ago. It's changed so much, he said. Housing prices are ridiculous. Yes, I was literally just talking about this the other day. Starlink, Elon Musk's Starlink satellite internet will change the game forever. Work from home anywhere in the lower 48 with electricity. All right, what do you think of the cryptocurrency Monero, since Bitcoin less secure due to possible FinCEN rule that could expose all transactions? Okay, so what? Yeah, you may understand this. But what Monero does, okay, if you engage in a Bitcoin transaction, okay, sender or receiver, it's a bit like sending a postcard. Okay, you can see the wallet address. Now, it may not be tied to an individual, but you can at least see the wallet address from the sender and the wallet address of the receiver. And so you can get on one of these blockchain data websites, and you can see how much Bitcoin, basically an unspent transaction receipt or whatever they're called. You can see how much money is in these Bitcoin wallets, basically, or how much money is attached to, how many Bitcoins are attached to these wallets. Well, what Monero does is it basically takes this postcard, the sender receiver, and the amount of this transaction, and it kind of puts it in an envelope. And so it gives more protection to the sender, more protection to the receiver. And you also can't see how much that transaction is for. So Monero is a privacy currency, or maybe a privacy utility token that allows more privacy and better security for transacting in cryptocurrency. And then you can take that Monero and then you can exchange it for Bitcoin, or whatever, if you don't have to transact it. Rich, by the way, before I go any further, Rich says less than half of the watchers have hit the like button. Come on, people. It's not that much effort. Thank you, Rich. Yeah, and I'm really bad about telling people to hit the like button too. So smash that like button if you want me to continue doing these. It's also going to help me reach more people with these messages. So, okay, the SEC has already come out and said that there's going to be more Bitcoin regulation in the United States beyond KYC. A number of people in the financial services industry have said, yes, Bitcoin will be regulated. The banks want Bitcoin regulation because they think that's going to add stability. It's all, if there's some federal oversight committee or some, financial, or not federal, but federal financial oversight committee, or, there's a greater share of interest at the SEC, basically all these banks say, oh, that's going to stabilize the price. And we're still going to be able to trade it. We're still going to be able to make money off of it. But, that may be look, wealthy people buying into Bitcoin, the banks are going to make money off of that regardless. Bitcoin goes up, Bitcoin goes down, it doesn't matter. And so they do want it highly regulated. Also, that's going to allow these trading desks to pile in. That's going to allow these bankers to, depending on what exchange they trade on, I don't think you can replicate the success of high frequency transactions, or high frequency trading rather, these HFT algorithms that basically just make stock trades in just a fraction of a second. And they do that. And it's, basically just, that's how a lot of these trading desks make money, is through HFTs, high frequency trading. I don't know that Bitcoin exchanges necessarily lend themselves to HFT. I should say exploitation by HFT. However, they're going to work on something, okay? Or there's going to be some, or the federal government's going to say, okay, well, you can only, if you want to trade these cryptocurrencies, or if you want to trade Bitcoin, you can only do it on, and then there's going to be a new NASDAQ or a new NYSE exchange just for cryptocurrencies, or maybe it'll happen over the CBOE, or, I don't know, maybe they'll add it to the CME or something. I don't know exactly where they're going to put it, but I think they're going to try to centralize the exchange as one part of the regulations. I've talked about, I don't think they're going to ban Bitcoin. I think what they'll probably end up doing is banning private wallets, or trying to force software companies like Exodus that makes a private hot wallet, and you basically you can run it off your computer, or I don't know if they have a smartphone app yet, but make KYC regulations. So before you can make a wallet on some of these softwares, you have to show proof of identity, and it's basically like signing up for a bank account, right? They want KYC. They don't want they don't want a shadow financial system, which is exactly what the founders of founders of Bitcoin wanted, is basically a financial system that's free from government monopoly, free from government exploitation, that's free from regulation. Governments can't inflate it into oblivion. People can choose that as their store of value, and basically have it be a generational wealth building tool, right? I mean, you put all your money in the bank, and it can be that those dollars are going to be inflated away. You put all your money in the stock market, it could crash. You put all your money into real estate, well, it can be expropriated from you. And this is not just in the United States, but all around the world, right? One reason why there's a lot of reasons why very poor countries are still poor. But one reason is because they're just not a good vehicle to build wealth. And that's why so much money flocks into the United States. That's why so much money comes into U.S. real estate, because it's pretty stable. Why it comes into our U.S. markets, because they're regulated and fairly stable. And, basically any sign of danger, right? What is it called? The plunge team? I forget exactly what it's called, but they can turn off trading. They can do whatever. They can do a number of things to protect investments. And so I think they want to regulate Bitcoin exactly like they regulate the stock market. All right, Joe says, I'm in commercial real estate, and yes, this is a big fear with both retail and office. People will not be returning to their offices in large numbers. There will be a glut. Yes, and that is going to drive down prices. And I don't know if it's necessarily going to cause a bubble pop, but it certainly will deflate the bubble. Not sure. Glenn says, morning from Idaho, still waiting to get you out here. Yeah, I haven't been to Idaho to teach a class in some time, probably at least a year and a half or so. We had talked about doing a class out in Missoula, Montana, and I just need to find a good time to get out there. It will probably be in September, probably in the shoulder season, avoid the rush. But we could probably run one up in Coeur d'Alene, or even run one in Boise. I've not done a class in Boise yet. So if you're, Idaho's kind of a big state, north to south. So if you want to do one in Boise, or whatever's convenient for you, or we'll split the difference. We'll run one in Twin, right in between Boise and Idaho Falls, if that's what you want to do. All right. C asks, what's your view on American Contingency and their organization? I have known several of the folks over at American Contingency. As you can see, I'm wearing this Fieldcraft hat, and they're not the same company, but I generally like that crew. I think they're doing good things. Do you think that California will become more level in the political sense with the exodus reducing its blue voters? This is one argument that I've heard, as you have this blue migration out of California. Basically, Republicans will gain better representation. And, that might be the case. The problem is so many illegal immigrants come into California. And that's one reason why the Democrats, they have to do a path to citizenship or some form of amnesty. It's because they have to get more voters to replace all the ones that they're aborting. And so while I understand that argument from the conservative side, look, pathway to citizenship is just going to turn a lot of these states permanently blue for another couple of generations. So no, I'm really not that optimistic that California is going to be flipped red due to the third or fourth great migration. All right. VA Wolf says, coming to us behind the blue wall in Northern Virginia. Yeah, I used to work for a company that was based out of Northern Virginia, and I would go there about once a year. And Northern Virginia it's kind of like its own little country almost. It is. I actually think the state of Virginia and the rest of Virginia and Northern Virginia should split. I'm not serious about that, but Virginia would be red if it could just break away from Northern Virginia. I mean, that's where all the, a lot of the money is. So that's obviously not going to happen, but there are a lot of states like that. You carve off one major metro area off of a state, and the rest of the state is 60, 70, 80% red at that point. All right, let's talk about this because this is actually a pretty big topic. Glenn says, I'm not comfortable with an asset that can be lost by losing internet connection. So even if you lose internet, you actually don't lose Bitcoin. You may lose your ability to transact in Bitcoin, just like if the internet goes out, you're not swiping a credit card or a debit card either. You're not going by an ATM. You're not buying anything online. So, excuse me. So that money is still there. It's still there. So, you won't be able to spend it. But again, I talked about this yesterday with satellite internet, and I actually mentioned Starlink yesterday. Satellite internet, and actually Africa's a really good kind of, it's not really the use case, but a really good example of what's happening. One reason why I am bullish on Cardano and have been, and actually before I get kicked off of Facebook, I remember having this kind of debate with someone. And, he asked me what my top few coins were. And I was like, yeah, Cardano's up there, ADA. And one of the reasons is because they're pioneering cryptocurrency use in Africa. Now, look, here's the deal. The world, it is a changing. By the end of this century, probably by the middle to 2050 to 2070, it's something like 6 or 8 of the world's top 10 most populous countries will be in Africa. Okay. Nigeria is going to be twice the size of the United States. Nigeria. And actually Lagos is like, it's going to have, or Lagos or whatever, it's going to be massive. I mean, it already is, but it's going to be even bigger than it is today. So much so that, maybe it becomes kind of the financial hub of Africa, potentially. So it's either 6 or 8 of the top 10 most populous countries in the world will be located in Africa. Africa is a place that they have problems, okay? And actually a reader emailed me to push back on this idea, but let me tell you what's actually going to happen. They are attracting foreign investment in Africa because they have natural resources. They are also trying to improve education, and they're trying to build tech hubs in Africa. And I'm not saying like Africa's going to be a Wakanda, okay? Because it's not. But you are going to have some places in Africa that do very, very well due to aggregate demand of economics, due to foreign investment, also due to foreign aid. There's some countries, I think it's Rwanda, has more citizens than it can actually feed. Rwanda has more population than its actual carrying capacity in terms of food production. Okay. And that's a problem almost wholly created by Western countries just sending lots of food and money there. And so I'm not saying that Africa does not have problems. It obviously has very large problems, very structural problems. However, the one thing they're doing right now is adopting cryptocurrency. And this is just a rumor, and I haven't actually heard this as confirmed yet, but Cardano may be nearing a deal with the government of Ethiopia to run basically a native digital currency in Ethiopia on the Cardano blockchain. And so if that's the case, and we've seen Ukraine, I think they're using the Stellar blockchain for national digital currency. This is the future of money, guys, digital currencies. And there are blockchains in existence today that are going to make a lot of money for people who own these tokens today. That's one reason why I'm bullish on Cardano. It's because they're establishing a foothold in Africa where you have a lot of people who are unbanked. You have a lot of, you're going to have more economic transactions. So people making more money, they got to have a place to store it. They're probably not going to store it in the national bank. So what are they going to do? They're probably going to store it on not all of them, but some number of them, including very wealthy people. The more money you have, the more you want to protect it. And so if you put it in a bank, yeah, you can suffer expropriation. If you put it in cryptocurrency, they might kill you, but that money's still going to be there. And so this is one reason why I'm extremely bullish on Cardano, is because they are adopting cryptocurrencies in Africa just due to lack of banking infrastructure. So yeah, plus Coinbase is going public. Guys, we are it's been happening, but we really are on the precipice of a major financial revolution. All right. Great question. Does a blockchain currency prevent inflation in comparison to things like the US dollar? Okay. So you look at Bitcoin, right? And there will never be more than 21 million Bitcoins. I think it's the year 2140, I think is when they're going to mine the last Bitcoin, I believe. There's never going to be more than 16 million. And guys like Peter Schiff, they say, well, there's Bitcoin Gold and wrapped Bitcoin, and there's all these other Bitcoins, Bitcoin Cash. So, it's really not capped. Well, yeah, look, it really is capped at 21 million Bitcoin. That's it. Yesterday, I said 50 million millionaires in the world, 21 million Bitcoins ever in existence. And there's maybe like between 16 and 18 now. So there can be a lot of millionaires who do not own one single Bitcoin. And frankly, if you own one Bitcoin today, even if the price of Bitcoin falls by 50%, I'm going to sell out. Once this bubble gets popped, yeah, I'm absolutely going to sell out. And then I'm going to take all that money and buy back in on the bottom, because there are going to be a lot of people in the future, the next 5-10 years. Once they realize that currencies globally will probably be in a race to the bottom, they're going to want to put their money somewhere else. And they're going to increasingly look at Bitcoin and cryptocurrencies. And I really do believe if you're in the crypto space right now, you are ahead of the curve. Okay. We've in terms of that, what is it? The adoption curve? I forget exactly what it's called. But we're past the innovators. We're probably into like the early 1/3 of early adopters. In other words, we are in the process of crossing the chasm right now. And maybe, once these ETFs and these major financial institutions get involved, that probably signals that we're past the early adopters phase. So we are, I don't want to say we're probably not in the first third. We're probably in the final third, rather. We're crossing the chasm, the final third of early adopters into the early mainstream. So, most cryptocurrencies, the people who build the technology can basically decide how many they want. Okay. So there are some cryptocurrencies that will have an infinite supply of tokens or of coins. There are others that are capped, right? They say we're going to have 10 billion coins, or we're going to have 1 million coins, or we're going to have 1 trillion coins, or whatever. That is inherently disinflationary. Okay, depending on how quickly they generate those tokens into the future. But having a capped amount, especially a capped amount that's in existence today, that's not going to expand in the future. A lot. And even Bitcoin, right? They only mine so many new Bitcoins. Bitcoin is inherently disinflationary, basically, because the rate at which they mine new Bitcoins is much lower than the demand. That's why the price of Bitcoin is shooting up, even though they're mining new Bitcoins, with whatever frequency all the time. So, even if Bitcoin, here's the deal. Let's say Bitcoin stops at whatever, it was at 55,000 this morning. Let's say it's 56,000. Even if Bitcoin stops at 56,000 and literally never has a price move ever again, and it's just pegged at that number, it is still going to retain value compared to a dollar that is declining in value. So, 0%, 0% gains in Bitcoin plus, negative 3% or negative 4 or 5% for the US dollar. You're still going to be up 3, 4, 5, 6% on the US dollar, because even though you have not gained anything priced in dollars, you will have basically increased the value of that Bitcoin priced in dollars. Now, this brings up a good point. Yes, the Bitcoin protocol can be changed. Okay, so you have a group of miners that say, no, actually, no, we want another million Bitcoin. And, that would be basically cause a Bitcoin civil war. But, certainly that could happen. A lot of this stuff is achieved by consensus, especially by the major miners. And, so that's a very low risk, but yes, that is one possibility. I don't think that's going to happen. But, that maybe is one possibility in the future. Where is Bitcoin stored in case there's a state-sponsored cyber attack? Okay, so yes, in theory, if you had enough resources, you could attack the Bitcoin network. But Bitcoin is not really stored. See, that's the thing. So many people, and Rich, I'm not knocking you, but I'm just saying, a lot of the people who come out against Bitcoin really don't understand. Okay, Bitcoin's not really stored anywhere. It's like you have a receipt, okay, that's recorded on the blockchain, and that says this address has this many unspent Bitcoins, okay? And so let's say you have 1 Bitcoin and you're going to send 0.5, you're going to go buy a car in the future from the Ford place or whatever, and you're going to pay for it in, let's say, 1/2 of Bitcoin. So you send 1/2 of Bitcoin. That transaction gets registered on the blockchain, and your wallet address basically gets updated. You sent 0.5 Bitcoins, and now subtract 0.5 Bitcoins from your total. So it's not really stored anywhere. It's just recorded on a distributed ledger. And the thing is it's recorded on every ledger. So it's not like you could it's not like you could hack into it. You can hack into a bank account and you can say, oh, I don't want $3 in there. I want $3 million in there. Okay. And there you go. And you cause the bank a massive headache. You can't really attack Bitcoin like that because of the distributed ledger system. And so, basically once a transaction has been registered on six ledgers, basically anytime you conduct a transaction in Bitcoin, you distribute that. It's kind of like a press release, right? You distribute that out to the blockchain and to all the distributed ledgers that are connected. And so those ledgers record this transaction. And then, once you get 6 confirmations, it's basically as good as permanent. I mean, it literally is permanent. And then the rest of those distributed ledgers just copy that stuff. So the short answer is your Bitcoin's not really stored anywhere. It's not like a bank account. It just exists as a proof. Well, I don't want to even say proof of stake, but it exists as a receipt on the blockchain that this Bitcoin address has this much Bitcoin in it. So I hope maybe that makes a little more sense to you. Okay, I'm asking what hard assets makes more sense than precious metals. Well, you can't eat precious metals, so maybe farmland. Would I rather have 10 ounces of gold or say 5 acres to build a homestead on? Well, I'd much rather have 5 acres because I can buy a goat, or I can buy a mating pair of goats, a mating pair of rabbits, and and a couple of heifers, and pay for a bull to come pay them a visit. And now I've got the gift that keeps on giving, food. So what hard assets make more sense than precious metals? I mean, frankly, farmland, like arable land, is probably one of the most things that makes the most sense. All right. Let's see. Look, if I went into this pretty hardcore yesterday. Look, I used to be a big gold and silver bug. Okay, I was massively into silver. And then this thing called Bitcoin came along, and I didn't understand it at first, but I started accepting Bitcoin in 2014. And the more I looked into it, the more I'm like, actually, this is very revolutionary. And now that we're seeing mainstream adoption, look, guys, here's the deal. Here's my thing on Bitcoin. Okay, if you're in, I mentioned this yesterday. I'll just mention this briefly. If you're in Bitcoin, if you're in some of these smaller tokens and you're making 5x, 10x, 20x, 100x gains, you should be taking profits. You should, and again, I'm not a financial advisor. This is not financial advice, but I would recommend that people do take profits and convert that into something real. Convert those into real assets. And maybe that's silver or gold. But I'm just saying, people who pile all their money into gold and silver, I mean, look, gold can be confiscated, right? I mean, so what are you going to do? Bury it in your backyard? If you have to leave for some reason and you've got, 2 bricks of gold, or you got 1,000 ounces of silver, okay, that's something that you have to transport. I literally could wash up on the shore of Costa Rica, buck naked, and if I remember 12 little words and get access to a smartphone, I can recover my wallet. Okay, I can recover whatever, and I can have money there, and I can go buy some clothes if they'll let me in the store. So I guess my point is, everything has its advantages, and Bitcoin has some pretty incredible advantages. Not only that, but as I talked about yesterday, there's more gold money going into Bitcoin right now. And so Bitcoin I think it's a much better investment, frankly. This guy cannot decide if Bitcoin is going to be a new financial system. Well, okay, here's the deal. Bitcoin's in a bubble right now. It absolutely is. All cryptocurrencies are in a bubble compared to, basically valuation right now. In price 10 years from now, Bitcoin's probably not in a bubble, but we are in a period of price discovery. So Bitcoin can be both. It can be a new financial system and also something to gamble on. Okay, I do think buying Bitcoin at $56,000 is incredibly speculative. Maybe I think Bitcoin probably will go up from here. It could also retrace and go down 50 to 80% from here. Okay, so being that people are still trying to figure out what the actual value of Bitcoin is or what the actual price of Bitcoin should be, should not dissuade people from looking at Bitcoin as a new financial system, because it is. Okay, we're in the very early stages, right? I imagine when people first started using gold, there were people who said, "Oh, you can't eat that. Oh, who wants to trade in gold?" Okay, and 1,000 years later, everyone used gold. And this is kind of the same thing. This is so new. Listen, the people who come out the hardest against Bitcoin do not understand it. I've seen the comments. I've seen people, "Oh, you know what you're talking about. Oh, Bitcoin's has no intrinsic value." Okay, all these other things they say. And these people, start asking them questions about how Bitcoin works, right? I'm still getting questions about how Bitcoin is stored. People do not understand it. And a lot of people fear what they don't understand. And look, don't take my word for it. Do your own research. Look into Bitcoin. But cryptocurrencies are here to stay. It is the future of money. And your kids or your grandkids are going to be conducting commerce in cryptocurrencies as commonly as they use their cell phone today. Bitcoin is not an honest weight or measure. Okay. There we go. JL nailed it. Too much complexity in crypto right now for the plebs. All right, look, guys, this is just, this is like electricity, right? People said, "Oh, don't use electricity, use the candle because the candle is safer." And, what if the power goes out? You still have the candle. Okay, great. But I would much rather have electricity. Thanks. And, more and more people are kind of waking up to realize this. We're in the very beginning of cryptocurrency adoption curve. Actually, we're probably like 20% through the adoption curve, maybe 30, 40%. But the people who are afraid of it really don't understand it. And you start asking them questions about how Bitcoin works. They have no idea. They don't understand it. No clue. All right. So there was no Roman Bitcoin. No, but you know what? If there was a Roman Bitcoin, Romans would have adopted it, because you look at the history of the denarius, the silver coin, which is the standard of commerce throughout the Roman Empire. And they started chiseling. Look, they started chiseling off the edges. The Roman, basically the central authority, the mint or the bank or whatever they had back then, not really the bank, but the Roman government basically started chiseling off the edges of these denarius coins. And they used that to make new denarius coins. So yes, there was inflation. There was money printing back then, even though they just took those shavings and made new coins from it. If there was Bitcoin back then, or if there was some new revolutionary thing, then yeah, people would have used it. Oh, let's see. Hang on. There we go. Yep, JL. The people who come out the hardest against Bitcoin don't understand it. Based and red-pilled. Well, I tend to agree. Thank you. All right, let's see here. Yeah, holding dollars is like holding a melting ice cube. Guys, we already know this. I've talked about the historical cycles. I've talked about the history, basically the cycle of world reserve currencies. We know that we're on the tail end of the US dollar as a world reserve currency. We know that the Chinese digital yuan is gaining market share. There are going to be cryptocurrencies. Basically, Bitcoin is gaining market share as a store of value, as it might even become some form of a world reserve. We're probably going to have SDRs, the IMF special drawing rights, become digitized. I imagine at some point in the future, that's going to become maybe another alternative world reserve. So look, we know that the long-term future of the dollar is very, very dim. As Bill just said, by the way, good. Bill, it's good to see you. Yes, the dollar is going away. It may not, it's probably not going to disappear. Probably not within my lifetime. It won't disappear, but it's going to be greatly devalued from where it is today. Just like, over the past from 1913 to 2013, or from today, it's lost 97, 99% of its purchasing power. Your purchasing power in dollars is disappearing, period. And the question is, real assets, it's not really a question. Real assets will replace a lot of people's store of value. They're going to take money out of the banks, where it can basically disappear due to inflation, due to negative interest rates where you pay the banks, or de facto negative interest rates. Here's the deal, guys. You buy a 10-year treasury, and based on inflation, you have a real negative yield. You're losing money by putting your money into bonds. That's why the bond market is, virtually imploding right now. And it's going to get much, much worse in the future as more and more people realize, hey, there's a much better place to put your money than in US dollars, than in the stock market, than in bonds, than in other things. Most traders of Bitcoin have more faith in crypto than the dollar. Yeah, you know why? Because we can look at the technology. We can look at the blockchain and its utility. We can look at the algorithms or the protocol that crypto is based on. And it's not at the whim of the Fed, right? The Fed's printing they're basically buying $120 billion a month worth of bonds, securities, whatever. And you don't get that. You don't get that in crypto. And not only that, but crypto is way more liquid than the US dollar. So if you had to move $1 million, well, let me rephrase that. In some cases, this is way more liquid. So, all right. JL says, first, thanks for the super chat. Keep up the good work telling the audience about crypto. It isn't easy, but our guys need to get on board. Anonymous says, is it even worth investing in Bitcoin anymore? Should we be investing in other cryptos with more growth potential? Yes. And Troy is my economist at the Ford Observer staff. And we have been doing some due diligence on some much smaller tokens that we think have much greater potential. I keep trying to tell people this. I am not buying into Bitcoin here, and I would not be buying into Bitcoin right now. And maybe it does go up to 70,000. I think we're in a bubble. If you actually look at the long-term chart of Bitcoin, I don't know why anyone would buy in at the top here, but rich people especially are buying in at the very tip top of this thing. And who knows, maybe it goes to 70 grand. Maybe it goes to 100 grand over the next, 3, 4, 6 months. I don't know. Maybe by the end of this year. That's what people are saying. I don't know, but I'm not buying into Bitcoin anymore. And you might buy into Bitcoin and maybe it doubles from here. Maybe you get a 50% gain. Maybe you get 10, 20, 30% from here. There are much smaller products that are trading that are incredibly undervalued based off their adoption potential. So Troy and I are going to launch Crypto Observer, and that is going to be, weekly commentary. We're going to be talking about these tokens, how to get them, because you can't buy them on Robinhood or Coinbase or whatever. So we're going to be showing you how to get these smaller tokens. We're going to be talking about their utility, their use case, their adoption potential. And pretty crazy. I think there's a pretty crazy potential. So you might get 20, 50% in Bitcoin from here. Maybe you get 100% if you're really lucky. But some of these other tokens, you'll probably get 1,000x over the next couple of years. Okay, Bitcoin as a world reserve, limited to 21 million. Okay, now this is actually a good point. Okay, I agree with your conclusion, but your premise is misguided, Scott. There is not going to be the world reserve anymore. There are going to be world reserves. Bitcoin will be one of them. One of them, Bitcoin will be. It will not be the world reserve. And I apologize if I misspoke earlier, but it's pretty clear where we're headed. The United States may continue to be a reserve in some form or fashion into the future. but it is no longer going to be the world reserve. And maybe, look, maybe gold also is considered a reserve. The Chinese digital yuan is going to be in some form a reserve. We're probably headed towards a basket of reserves, not just one world reserve like we have had in the West predominantly, but also in the world specifically over the past 600 years of monetary history. Let's see. Okay, how traceable and controllable are cryptocurrencies? Okay, traceable, yes. Like I said, Bitcoin is basically an open platform. There are entire websites that provide the blockchain information. So if I send you 0.1 Bitcoin, it's going to register on the blockchain. Anyone's going to be able to look at that. As a matter of fact, some of these political organizations or social groups, they publish their Bitcoin address. You can actually take that Bitcoin address, plug it into one of these the Bitcoin Blockchain Observer websites, and see how much their balance is. So, yes, there's a large amount of transparency. Now, I may not know who specifically owns that, and you can probably figure it out if you have, if you're a state-backed entity with, $1 billion budget or whatever, you can probably figure that out based on IP address, based on use, based on, a lot of other factors. Just like you can look at Tor traffic and, separate out. You may not be able to identify them specifically, but you can separate them out. And some studies have shown that. Now, how controllable cryptocurrency is, well, that's kind of the whole point is, Bitcoin is made to be uncensorable. You can't have your Bitcoin confiscated, right? So the US government can't just say, well, we don't like this guy, or, he's doing this that we don't like, so we're going to freeze his bank account. Well, you can't freeze his Bitcoin address. Now, if you're to take over Bitcoin, somehow, or get all the miners to agree that this guy's a bad guy, then yeah, maybe you'd basically probably have to create a fork, which they're not going to do. But I don't want to say it's impossible, but it's incredibly unlikely that anything like that happens. Governments are not going to be able to censor your Bitcoin or your cryptocurrencies. All right. Okay, Cypher says he's big on Ethereum. Now, look, I like Ethereum. I'm a huge Ethereum guy. The problem is the gas fees right now are incredible. Okay, so basically the way this works is I send you Bitcoin or I send you Ethereum. Okay, I have to pay a small fee, or I have to pay a fee, which basically provides revenue for the miners and the people who are running these nodes to confirm that transaction. Okay, that's how they get paid. That's what's in it for them. But yeah, Ethereum gas fees, what is it like? Is it 1770 or 17? I forget which upgrade they're doing, 1759, or I don't know, whatever upgrade proposal they're on. Once they cut down those fees, yeah, Ethereum, I think, is going to skyrocket. But look, that's one reason why Polkadot, and another reason why Ethereum and Tezos and some of these other smart contract blockchains are gaining ground on Ethereum, because the gas fees are just so incredibly high right now. It's ridiculous. How will Bitcoin's value be determined if currency becomes essentially worthless due to hyperinflation? Okay, so Michael Burry, who is the big short guy, right? They wrote a book and made a movie about him. He was talking about hyperinflation, and basically he was saying, look, I think that the future of the US dollar is hyperinflation. He didn't say that specifically. That's where he's moving towards. And he said that about a month ago, and I actually need to go back and check what some of the more recent things he's saying. But, that's one of the guys I pay attention to. When they talk about something, I'm like, yeah, they have a pretty darn good track record of calling stuff before it happens. So I should probably listen to them, at least take what they have to say into advisement. So the problem with hyperinflation is, who's going to give you Bitcoin for hyperinflated dollars? Okay, that's the real problem. It's an economic quandary. It's not so much a currency quandary. Why am I going to give you something of higher value for something of lesser value? Now, maybe someone needs to buy something in US dollars, and maybe you find a buyer. Okay. At this point, we need to stop talking about a trade. I'm not trading you Bitcoin. You are buying Bitcoin with your hyperinflated dollars, or I am buying hyperinflated dollars with my Bitcoin. So if you can find a buyer, or if you can find a seller, if you're the buyer and you can find a seller, then you can make a transaction. So in terms of Bitcoin's value, how are we measuring the price of Bitcoin? In dollars, in gold, in a barrel of oil, in digital yuan? I don't know. I mean, that's really a kind of a personal preference here. All right. Bill says, hang in there, Sam. The learning curve for crypto is steep, but encourage everyone to get started. I absolutely agree. Now, this is actually an interesting point. This is something. So a couple months ago, I started talking to some friends about building a deliberate community, right? That's based on crypto, not as a, hey, let's go do this, but as a thought exercise. Let's kind of think through this. What would this actually look like? Gulf City Librarian says, it seems like if you do community building, having a cryptocurrency standard and also having metallic standard would be the best way to secure purchasing power than choosing one over the other. Okay, the problem right now is that we are so early into adoption. This idea that the US dollar is going to be devalued at an accelerating pace over the next 20 years than it has over the last 100 years. This is still a foreign concept, right? You start talking about this stuff and people's eyes glaze over. They just don't get it. But as more people do get it, I do think cryptocurrencies, and I've talked about the possibility that local cryptocurrencies, or maybe a state or a region, either a state government or basically, this social group or whatever, maybe some tech innovator says, hey, we got the local McDonald's to accept, Tex coin or, whatever. I don't know, whatever. And now, people start buying and selling with Tex coin, or let's just say, right, as an example. And yeah, there are probably some laws and some other things that will, that might diminish its use. Basically the federal government says, well, we want a monopoly on the US dollar, and sorry, Tex coin, you're going to be banned or whatever. And maybe they try to ban it. And honestly, that'll probably just get more Texans using it. So the point is, geez, some of these comments, guys. MMT is the death of the dollar. Yep, we have basically, we have de facto adoption of MMT right now, modern monetary theory. Okay, here's the deal, Jeff. I do believe, there has been this push for a single currency, and a digital currency is probably very attractive to globalists, right? Because I do agree, if you can get the world using a single currency and you can chop off bank accounts and freeze people for political dissidents and, all this stuff, then yes, it would be very easy. The problem is there's still so many innovators in the world, and the cryptocurrency, marketplace, the cryptocurrency landscape is flourishing right now. And so I don't think there may be a reserve currency. Maybe the IMF comes out and says, okay, we've got digital SDRs or, whatever, IMF coin. And, that's going to be the world reserve. And maybe they get people to buy on. I don't know. Unless the IMF's under China's thumb, I don't really see that happening, because China basically wants the digital yuan to become the world reserve currency. They've basically said that in the past. They know that's where they're headed. That's exactly what their intention is to eventually launch the digital yuan globally. So there's too much adoption of cryptocurrency right now. Too many people seeing its uses, I think, for us to go to one single global currency. I mean, you just have to have a massive amount of computing power to destroy the rest of these cryptocurrencies. I just don't think it's going to happen. I think it's probably physically impossible. Okay, Jesus, man. Okay, smart aleck. Listen, you have to understand. Listen, I'll give you the benefit of the doubt because you weren't in my rant yesterday. But eventually a cryptocurrency will become the national currency. Okay. So, or maybe a state or regional currency. So, okay, this is actually a very good example, right? You go to some of these border towns, okay, on the border with Mexico, and you go into a restaurant, and, or maybe some places in Canada, along the border, maybe they'll have a menu that's priced in dollars and US dollars and Canadian dollars, or US dollars and Mexican pesos. Or, you go to, I don't know, let's say Buenos Aires, okay, and you're like in a place where there's a lot of American tourists, and maybe they have a Well, actually, Argentina is a bad example because they don't, basically, it's illegal to own US dollars there. But the thing is, this whole idea of a peg, okay, a cryptocurrency that's going to be pegged to the dollar. Yes, there are stable coins, but there is no peg on Bitcoin. And yes, eventually, you may not like it, but yes, eventually you or your kids or whoever are going to be conducting transactions in cryptocurrency. And just like no one uses the Roman denarius anymore, and we don't use the horse blanket dollar, we don't use the British pound anymore. Eventually, no one's going to use the US dollar like that, and you're going to be using a cryptocurrency, whether you like it or not. Either you or your kids or your grandkids, or if you don't have kids, then the next generation is going to be using cryptocurrency to conduct commerce, and it is going to be as normal to them as picking up a cell phone. And they're going to look at the US dollar like they look at a rotary phone, like WTF is that? This is going to be a bygone era, man. We're in a technological evolution, and this is just the next form of money. Just like money used to be freaking seashells, and then it was copper, and then it was gold, and then about 5,000, 4,000, 3,000 years ago, the Chinese invented paper money, and people started using paper money, and then they started storing money in banks, and then we have fractional reserve banking. And, now we have decentralized finance. It's just the next leg up. It's just the next evolution of money. And cryptocurrencies are becoming national currencies. That's literally what the digital yuan is going to become a national currency. All right. Okay, let me tell you a little story about the pound. Somewhere between 1945 and 1956, the British Empire is completely over, okay? From over the course of 30 years, okay, 30 years, beginning in 1945, the end of World War II, as the British Empire starts losing colonies to independence movements, and they start, losing their grip on the world, basically. The British pound lost 50% of its value. Okay, 50% of its value over 30 years. That's what happens to the world reserve once it loses world reserve. So yeah, they still use the pound sterling, but it's nowhere near the value that it was back, 80 years ago or 100 years ago. So yeah, people still use the pound, but it doesn't have the circulation that it used to. It's also greatly devalued. So, the dollar's not going to disappear off the face of the earth, probably not within my lifetime. But, you basically have numerous iterations of a lot of these currencies. And so at any rate. Is there a schedule for your guys' crypto newsletter? No, Troy and I are still working on kind of not really a prototype, but we're trying to crank out a couple of newsletters to kind of, figure out where everything needs to be. And then we'll release it. We'll talk about it. Okay. All right. I tell you what, man, let's screenshot this and maybe come back to this in like 20 years. Maybe come back to it in 5 years. You're right. Crypto's not the next thing. It is the current thing. It's happening. Yeah, we did talk about NFAC for like 2 seconds, but all that stuff's in this morning's report. So if you want to subscribe and listen to the podcast version and eventually watch this show, because eventually it's going to turn into a Forward Observer show. All right. So gang, let's go ahead and cut it off here. Thanks for listening, everyone. Thanks for the support. I appreciate it. If you have questions, I'll be back tomorrow. We're going to be talking about some economic stuff. And then we'll do some more Q&A and hang out and have a chat sesh. All right. So until tomorrow, be well and stay out front.